What's up, everyone? It's June 18th, 2025. We got FOMC today. Opening rally. Then we pulled back for the middle of the day. Actually, FOMC gave us that leg two, leg one, deep pullback, leg two. We didn't go past this bar, this high right here, but we did get another move in that direction. Training range behavior, so it's delayed second leg. We even got a leg three. Al Brooks likes to say, when we have FOMC, restart the day, treat it as a new day. So if we didn't want to count today's price action here, you could say leg one, pull back, leg two, pull back, leg three, leg one, pull back, leg two, pull back, leg three, wedge top, sold off for a few legs lower. I don't trade FOMC, but I saw this leg down and I thought I could get a retest of the lows here. So I ended up shorting a little bit here. I traded really small because I don't really trade FOMC. I shorted a little bit here, and I just got out right around here. Funny enough, that was a lot of points, and it actually threw me pat. I broke the inconsistency rule now. Only 15 on ES, but on NASDAQ, it was a lot more. Well, NASDAQ's 4 times bigger. My average price was like right around here. Yeah, so I caught about 60 points. Not too bad. But I'm also not going to be trading FOMC again. The bars are moving a little too fast for me. Didn't like it. Anyways, let's do the breakdown. Tomorrow's June 19th. It's a holiday, so no breakdown tomorrow. Weekly chart, daily chart. Weekly bar starting to look weak. It's got a tail. Still has a bull body. Still have, what do we have? Today's overnight session and then Friday to go. So we'll see how this week's closes. Not looking good for the bulls. Bulls want this to be a close on its high. They're starting to favor more trading range price action. Leg one, pull back, leg two, pull back, leg three. Look at the distance from this leg to this leg. It's big. And then look at the distance. The next, here, let me draw it. So like right around here. Just a rough estimate. And then look at from this leg to the high of this leg. You can measure it from up here, however you want to measure it. But the idea is like here's a visual representation of the strength of the bulls is diminishing. This bar, this breakout had a lot of strength. This breakout was just about half, maybe 1/3 of the length of this bar. I hope that makes sense. That's one way to measure breakouts. Like you could say from this bar to this bar is high. And then this bar to that bar is high. And then this bar to that bar is high, or this bar is high. So you can see the second leg had the most momentum in it. And it did get its third leg here. The second leg got another leg up. And now the bulls are losing strength. Again, we're right around the breakout point. Bears want to sell off. Bulls want to rally to a new high, all-time high. Daily chart, bars are shrinking, so range is contracting. We're in a broad bull channel, kind of at the channel lows here. Leg one, pull back, leg two, pull back, leg three. And this third leg failed to make a new high. So again, bad for the bulls. Momentum starting to stack in favor of the bears. Bar one, big bear bar closing on that slow. I would say this is strong to get second leg. I think it is strong to get second leg, however, it doesn't. It ends up trapping bears all the way up. We can see there's a tail on bar one. So we know bears tried to get short, and then there was well, it wasn't a gap up, but the bears that shorted here, they never had a chance to get out at break even. Bar two, big bull bar closing on its high. Follow through bar three. 1 second, I'm trying to change the color of the mouse. Follow through bar three. Bar four breaks out and makes the gap with bar five. Bar 5 also has a tail on it. So bar 5 is not the best close, testing the higher time frame EMA. Bar 6 is the first opposite bar. So we have 4 bull bars in a row. 1, 2, 3, 4. Bears that try to short here. So I'm trying to focus on trap traders. Bears get short here. Let me make this a different color real quick. Can you guys see that better? Maybe if I make the lines thicker, actually. Thicker than a Snicker. Now you guys can see it. So bears get short below bar 1. They short around the high of 5. Their break evens right here, and they never get their break even. you can see that the tail on 7 just rallied. It comes down, traps them. So if they weren't quick enough to take a small loss, they're going to end up taking a bigger loss with more than one contract because they doubled their position at least to get to 50%. So 2 times their position at least, and they're taking a loss. Bears are buying back shorts. This is causing a surge in one direction. Same time, bulls are buying the breakout. Bulls are buying the second leg. Bar 8's a bull bar, but has more tail than body. So there's two-side trading in here. Bar 9 has a small tail. So from the close of 8, sells off. Bulls buy that, and it rallies, creating another gap at bar 10. So bears tried to short the high of 8 with limit orders, and now they're trapped. Once bar 10 closes, there's a gap. They're trying to short higher, so we could put bears shorted here. Bears short the high of 10. And look, again, they don't get out at their 50% mark. Traps them, double their position size, they break out, and that causes 2 more legs up. The legs I counted were leg 1, pull back, leg 2, pull back, leg 3. Or you could say leg 1, pull back, leg 2, pull back, leg 3. Pull back, leg 3, leg 4. I'm going to recount that real quick. Make sure I'm doing this right. So, bears short. So bears short here, bears short here. Their break-even prices right here. What happens instead is bulls rally, trapping bears, buying back shorts. So we have a leg 1, pull back, leg 2, pull back here, rallies leg 3. Then this rallies, closes, pull back leg 4. Bar 14. Then that's just me counting fractal legs. If we counted the legs on the 5-minute, the visible legs, that'd be a different count. Let me just show you guys what I was talking about real quick, so we're all on the same page. There's your legs I was counting. I want to do one thing actually. I want the fibs to stay up there. Okay, now I'm going to draw a box around it. You guys will see why in a second. 1 minute time frame. Okay, look. You see what I mean? Bears shorted right here. I put it at the high of this, so that's where they're getting short. And then they short right here, the high here. So their break even's here. What happens instead is the market rallies, trapping them. So they never really get out at break even. And that's what the legs I was counting. So I believe I counted leg 1, pull back leg 2, pull back leg 3, pull back leg 4. And then that inside bar was pull back leg 5-ish. I didn't count the inside bar. Let me know if that makes sense to you guys. It's really important for us to understand fractal price action and how trap traders, markets are generally 50-50. So when one side gets trapped, that tips the scale for a little bit of time. So it's important we understand trap traders. Let me know if that makes sense to you guys. If it doesn't, I'm always happy to talk about it. Hit me up in the Discord. The invite will be at the bottom. Same situation. Another trap here. So bears short the high of 9. Bears can short here. They can short here. They short here. They're shorting here. Depends how long they're willing to hold. But on 15, so let's just say that's the first bear bar. They actually do get out break even. They buy back shorts, and there's a hidden bull leg right here. So a lot of things going on. A lot of traders getting trapped. Bears are averaging in. Now we have 3 bear bars in a row, 15, 16, 17. Tails, lots of overlap. So you could even say leg 1, pull back, leg 2, pull back, leg 3. Wedge bottom right around here. 18, 19 bull bars just to pull back for these 3 legs. So I counted 3 legs here, but if we're just counting on the 5-minute chart, we could just say 3 bear bars, okay? Pull back, leg 2. Leg 1, pull back, leg 2. Deep pull back, leg 3. You could say 30 strong at the end, its own second leg. And then it does leg 1, pull back, leg 2, pull back, leg 3. I was long here, and I scalped out on 29 for a quick profit. I got filled right around here. The trade was from the low of 9 to the high. And I was betting that we'd retest the high before we retest the low, but I was wrong. But I was able to scalp out for a quick profit, a couple points on 29. Then I saw 30 happen. I was like, oh, this is my other setup. When the opposite bar gets 1R. So I'll show you the bulls that buy the high here, their stops down here, and they immediately lose 1R here. So you're gonna buy back really quick to cover themselves. So the bulls bought up here, they buy more here, their break even price is here. That's where I had my limit order to sell. And you can see market rallied a little bit past that, and then it sold off. I got filled on 36. I took the same trade on 35, but I was quick to scalp out because now we're in that third leg down. So leg 1, pull back leg 2, pull back leg 3. Bulls bought here, kind of trapped, more sellers under the EMA. Bulls buy more here because it makes, so this bar made 1 hour quick, excuse me. The bulls buy up here, their stops down here, they get stopped out very quickly. Bears make 1 hour under a bull bar. So bulls are going to cover themselves. I get filled on 39, and I scalped out on 38 because it was that third leg, and then I avoided another loss because my stop was right here, and you can see that 41 would tag me out. So avoided a loss there. Not the best trade. I was trading a third leg, and then I caught it until FOMC. I didn't plan on trading FOMC, but I really liked those 3 bear bars that were lower, so I took the trade. So bar 30, strong to its own second leg, leg 1, leg 2. We are now in a bear channel. If this was the trend line, 28, 29, break that trend line, and you can see 30 sells off, retesting the trend line, the other side of the trend line. Here and here, breaks, retest. Deep pullback, 31, 32, letting trap bulls out up here, sells off for its own 2 legs, leg 1, pull back leg 2, pull back leg 3. Then we go sideways for a little bit. We're under the EMA. We're barely under the higher time frame EMA. Bears get a sell off, 47, 48, 49. Testing bar 1. So if you had, this is not a trade I would take, but if you had a limit order setting above bar 1, you would make 1 hour quickly. The reason I wouldn't take that is because it's been too long. I wouldn't have my limit orders. I used to, when I first started trading limit orders, I'd have my limit orders sitting there all day, but as I got more experience in them, I realized it's better to just pull the order and wait for the next setup. So I think this is right around FOMC. So here's that surge in one direction, leg 1, pull back leg 2, another way to count it. That's a hit in leg 2, and there were more sellers at highs. 15 got tested, sold right off. I wouldn't trade that, but limit order bears that trade that made money very quickly. You're going to take profits. The market rallies for a few more legs because bears are now taking profits. They're buying back shorts, leg 1, pull back leg 2, pull back leg 3. Then we get the spill. This is when I decided to trade FOMC, when I saw this and I saw the shallow pullback, 67. Bears got a gap right here. So we know bulls are trapped. They're buying support right around here and down here. Traps bulls. Bulls are going to buy more lower. You say maybe bulls bought here. They buy more lower. They bought all the way up here. So let's just do that. That's easier to read. Bulls buy up here. They buy more lower. They get out at the break-even price, and that creates the dynamic for leg 2. This leg 2 never went past the low here, but I got that really wasn't my target. I was just looking for a quick scalp because I knew these bars were moving fast. It could snap against me. And it does 73, 74, 75. 3-bar rally, strong to get its own second leg. However, it's late in the day. Deep. They get a deep pullback here. And we're actually going more sideways. So there's definitely trades to take today. The rallies, I caught a nice 1-bar scalp. If you're in the Discord, you saw that. Avoided a loss there. Had a winner here. Avoided a loss here. And then had a winner here. But I averaged into this. I shorted one here and I shorted one at the EMA. So I was going to take 2 contracts here, but I just didn't like how fast it was moving in. So I wanted to bail out, and I got that bailout. So I hope you guys did all right. Again, today was FOMC, so I didn't trade too much. I usually don't trade FOMC days. Tomorrow's June 19th, so we're off. The markets are closed. Short week, I guess. And then I'll talk to you guys on Friday. So you guys have a good one. Have a good day off. Use it to study, relax, do some back testing. Check out your trades, how you're doing this week. You guys have a good one. I'll talk to you tomorrow. Thank you for your time. Bye. If you learned something, share the show. Don't be a hoe. All right. Bye.